Hello, welcome to my YouTube channel. My name is George. I'm a trader already for a couple of years, roughly 5, 6 years. Um, and My main scope is scalping. I like to scalp the market. I don't like very much to stay on swing trading, but I want to give you guys a different perspective on when it comes to looking and reading the market sentiment. As I have seen many opinions, I see a lot of traders that sometimes are very bearish or sometimes very bullish, and then I think it's important to try come with a logical reasoning in terms of how to trade and see how the market is actually reacting on the short term. And as the long term, no one actually can guess. But short term, it's actually slightly predictable, as there is some evidence, scientific evidence that actually proves that point. Now, when it comes to to the current situation that we're all facing, uh, we have a recent Credit Suisse bailout coming up. It was now released an offer from UBS. UBS made an offer of roughly around $1 billion for Credit Suisse, which looks like it's something good, right? But let's think it for a moment. The Credit Suisse, the current market value, it's roughly on $8 billion. So paying only 1 billion for it, it's kind of paying for a discount. But this is happening because the government, due to the risk that Credit Suisse poses, decided to not provide any kind of guarantees to UBS in terms of the value of the bank. So the value that is now for Credit Suisse is basically a much lower one as a result of that. So Credit Suisse, doesn't look good for Credit Suisse. I think that we should expect on the Monday session a huge drop in the market value due to the situation that they are in right now. When it comes to the markets, let's give some thought in terms of where we are now and what we should expect. In this phase, it doesn't look very favorable. And to think about on the short term that we are on a bullish scenario. Um and the reason for that is because the at the moment the market trend, the way we can observe the market, the way it's reacting is showing us that there's here a decline coming up and probably a bearish flag over here, as we can see. Um, and and this will provoke a sell of probably either this level over here or this level over here. But what is really important, and this is what we need to pay attention to, although on the short term we have an opportunity to actually short the market, and that's good for us. It will be probably an easy trade to do it, but the what will define everything, it will be Wednesday. Why? Because the Fed will announce the interest rate hikes, and there's a lot of speculation going on that it's likely that the Fed is going to pivot, is going to stop, and etc. I find that unlikely. I think that they will go to market expectations, which is the 25 basis points, and I think that will produce on the short term a small correction in the market, either to these levels over here or maybe to a bit further down before a big bounce. And there will be a big bounce in my opinion, but it will be after this correction over here. And this big bounce, what I'm expecting is to see the market going back to um, to the levels of early February or maybe slightly higher. But as of now, it doesn't look good. The market sentiment is changing to the negative side. So we should see some negativity going on and the market going to these levels. Now, what makes me very interested in thinking on this looks still going to the upside also. It's because while I was trading, um, I could see that in this phase over here, this was the Friday session. To short this was pretty much difficult because the market was very bouncy. It wasn't possible to do, let's say, a swing trade over here, like from here to here, dropped, done. No, you had to go by blocks to make sure that you could actually do safely some trades. And while seeing this difficulty while shorting and these jumps at the same time, there's market. This is someone buying here, and they're buying quantity. So I I think that if there is some buying going on here, and there's some buying power. There are also some buying power that happened recently. I find it actually very unlikely that we are up for a crash. We are up for a correction, but a crash, I find it unlikely as of now. Um, and I think that maybe on the 22nd or maybe after some days, we should see a bounce. Um, the thing is that the bounce reason probably might not be a logical reason, but we have to see. We need to see what will happen in the future because it's very hard to guess at this stage. But at the moment, the market sentiment is negative, so we can expect a market to have a small correction or sell-off until either this level over here on the S&P 500 or this level over here and at 3850. Um, Now, there's something interesting that I have observed while studying charts, and I wanted to share with you guys. Why do I think that the market is actually going up and it's the market is bullish? When we think it uh, for a start on a short-term perspective, um, if we compare the values of where we were back in December and now back in March, and we compare with Nasdaq, Nasdaq is in a quite higher value. And this what basically is telling us is that the market is on a way more risk on sentiment compared to the past. So in December we were extremely pessimistic, and here we are far more optimistic compared to back in December. So, and also this base that we can see here, it was a very quick bounce. So it also gives me a signal that buying orders were executed by institutions, so it's likely going for an upside. And also this base compared to this base has a much larger, let's say, distance compared to these two because this one here is on the same level. So by this being a risk on asset, it's giving me some indication that the market believes that this is going to the upside on the short term. Um, when we look at to the QQQs in SPY, we can actually see that there was a huge decrease from from November um, until Jan December, and this happened for different reasons. First was inflation, uncertainty. Then there was a war in Ukraine, etc. And then here we had earnings, all good. And then we started to have a sell-off because of the inflation, measures by government, etc. And then here they were more or less correlated, the S&P 500 and QQQs when it comes to price development, and then they had drop again in value, where the QQQ which is a risky asset, is Nasdaq, compared to SPY, which is the S&P 500, the ratio declined over time. Now, what do we see different? We seen a huge increase on the short term. And this large increase is telling me that it's likely that in this region over here, the market believes that we are in some sort of short-term bottom and that we should continue to see to go to the upside. I do speculate that we are going in the short term to the 86 points, so we need to observe what will happen, and I think it will be the 22nd of March that will define the real sentiment in terms of what is the market direction. When we look to the VIX actually has a very interesting is a very interesting indicator that helps us to see and maybe have a picture of if we should expect a huge market sell-off or not. So what can we observe? So the VIX at the moment is jumped between 22 points and 30 points on the short-term basis, and we had no sell-off in terms of the market itself. This is actually a bearish sign, but we had yet no market sell-off. So what does this tell me? It's likely that we might have here a small correction, but again, if the VIX starts coming down, I do expect the market to go to the upside soon. So that's a bit how I am looking at it. I usually take most of the time short positions as is what I'm usually most profitable for me. But I do think that the market in this stage is still bullish. When we look to the corporate bonds, and this is a very risky asset, is usually smart money investing in this is a good indicator at that level. I do not find any divergences between the two. There was one on the 1 hour chart that we had uh, back in February, which was uh, this one over here, where we had here an increase and here we had a decrease. So, but this never played off very much. I mean, it went up, but that was it, and that this was what it was played. Now, the market itself is very correlated with one and another. So, on the short term, I do not expect any. I'm not seeing any divergences, so it's not very helpful in terms of to tell us if we are up for a market bounce or for a sell-off. There's no evidence regarding it as of now. I I was very interested in seeing what happened to the bonds. The bond market had a sell-off in the last session, in the last week session. So if you look, I'm looking here on a weekly time frame. Let me put this on a daily time frame. So, and in the past days, it had uh, a large decrease on the interest rate, and the reason for this is because the bonds market believe and this is what is being speculated in the markets, that there's a high likelihood that the Fed will actually pivot and start stopping the increase the hikes and then starts to plan also the removals. And usually this happens um, when we have a situation of inflation where the Fed has to intervene with a monetary policy and in increasing the interest rates. um, it's very likely that when something gets broken in the economy, in this case was the Silicon Valley Bank, now is affecting in Europe the Credit Suisse, that the Fed will start to remove interest rates and pivot. Now, I find that unlikely. Uh, there was a recent bailout on the banks, and I think that this pricing in that the market is doing right now, it's not actually revealing the reality. But what I think that we should consider is that maybe soon there will be a pivot or an announcement that this will be the last hike and will stay like this for the rest of the year. And when that happens, I do expect the market to rally up. So for the 22nd of March, I'm expecting a 25 basis points increase, and then and the market uh, likely um, will rally based on that. Um, and then we should arrive to levels of either beginning of February or back to the levels of August. When it goes to gold, gold had a very interesting development due to the increase of decrease of the U.S. bonds. Gold have went up, and again, it's likely that the bond market will start pricing in the the Credit Suisse buyout plus the situation that we're in, and it's likely that it will go back up in case the Fed announces the 25 basis points. So we have to wait and see. So I expect that in this week there will be a slight correction in the gold from the 2000 points back to 1950, and then I expect a jump from these levels up. And this jump that I'm expecting, it will be driven by the true pivot. So when the true pivot comes, which is the announcement of, okay, this is actually our last increase, etc. I expect gold to go up in this phase, and I expect gold to go up because gold and yields, they are not very good friends. So when yields go up, gold comes down. When yields come down, golds go up. And in phase of uncertainty, investors invest in gold as a safety asset. So that's where my belief is. Now, Bitcoin. Bitcoin is on a very interesting development also. It's currently going up, reacting possibly very positively to the news of Credit Suisse. I expect Bitcoin to have also slight correction this week and then go back up to the levels of 31,000 or maybe higher. My three targets on a long position will be 31,700, 37, 800, and 42. I think we're up for the upside very soon. Oil. In the oil, we have not yet priced in China reopening. China reopening is going on slowly, so it's a very slow process. It's not yet happening the real impact in the markets, but I expect that with the China reopening, that the prices of oil will start to go up to the 80 levels or 90s, as the same for gas. Gas is at the moment on the 230 points, and I think it will go to the 3.5 range, uh, and will be in between here, these levels ranging. And please do remember that we are under now a situation where the Fed policy will be impacting oil and gas, so it will be always in this range um, that the prices will be traveling. On a very good scenario, it will go down to 1.6, so and it will be traveling this range. But the image I have is that due to the China reopening and due to the fact that Russia is still excluded from uh, from the access to the economies in the world of the West, we will be in these levels as since Russia is the main provider of gas to Europe, um, and that it will have an impact in the price of gas in Europe and also in the US. And that's what I have to share. I hope you guys liked it. Please hit the thumbs up if you liked the video and subscribe. Give me also your opinion in terms of what you'd like to see commented in the YouTube channel. Um, I will, on the long term, share some interesting tools and ideas on how to trade and how you can improve your trading, as is something which I have a very large passion, and I hope it helps you in your life and to make a more safer journey during trades. So thank you so much, and I wish you all a great weekend.